Welcome traders to another video, and in this video we're going to go through price action rules, how to use them and how to trade them in the markets. Now we're going to go through candlestick by candlestick so we can see the rules developing, and we're going to rely solely on the candlesticks alone and the simple easy supportive indicator, the 21 bar exponential moving average. Now right off the get-go we can see that once we are doing our pre-market analysis, the market is a trading range structure. There is no clear trend. There's just move up, move down and move up. So in trading ranges, we have to use the shortened trend lines. We have to avoid looking for patterns that will be wider than the shortened trend lines. This is incorrect and this is incorrect. Why? Because in ranges, you really want to focus on the trend line rules. After you get a break, traders will attempt to create new extreme and then this downtrend is over. Then you have a break, new extreme, and then this uptrend is over. In ranges, your best bet is to follow the shortened trend line. So now that we're coming off the one side of trading range from the resistance, naturally we're expecting for price to go all the way down here, as a healthy trading range would act like this, from the top to the bottom and from the bottom to the top. This is the normal first inclination that we look for markets to do. So once we are in a strong downtrend and we are pushing below EMA, we're looking for high probability setup. We're looking for two-legged pullback at the exponential moving average or at the EMA at the key entry point, in other words. So the market is pushing lower, market is pushing lower, and this was the lowest low of this entire swing. So there's just a first attempt to sell if we get the trigger below this bearish bar, and the bar trigger. So this is the first entry short in a strong downtrend, but however, this is just a first entry. This is not high probability setup yet. The price hasn't moved to the key entry point yet. If you don't have the trend line, you act as the EMA is going to be a key entry point, but you're always supposed to be looking for some sort of trend lines. You guys can see how they are forming on the chart. So market is pushing higher, or we're finally confirming the key entry point, and there is a second attempt to sell. If we trigger below this bearish bar, which is confirming the second entry, this is now two-legged pullback to two key entry points. We're coming off the top, we're heading to the bottom. Structure right now is temporarily bearish overall trading range, and I expect for price to go all the way down, and this was a high probability setup. So first high probability setup for the day, following price action rules, simple two-legged pullback to key entry point, coming from one side to the other. So you combine range rules to trend line rules and a simple setup occurred. Now price is pushing higher. Just because we have a first break, I'm not expecting market to reverse. I'm expecting still new low to be formed. So you guys can see I'm drawing the shortened trend lines. I can draw it the same way here, because after there's a break, new extreme is going to be formed, and that will tell you that this uptrend played out. So right now, this is just a first entry short. I cannot sell. Market is correcting, and I have a second entry short. Can I sell below this bar right here? I have a break, but I don't have a new extreme. This low is lower than this. That's okay, because if price is holding, if key entry point is in the way, the attempt is going to be enough. You don't have to have specifically new extreme if key entry points such as trendline or EMA is holding. So at this point on, this is the second entry short, but EMA is holding twice here in the big bearish bar, and I still expect new extreme to be formed because this is the first break of this overall downtrend. And just like we had new extremes all the way here, I'm expecting new low to be formed right here, and I'm going to sell below this bar. And this is once again simple price action setup off key entry point, two-legged pullback, and market didn't create a new extreme yet. So I'm still thinking I'm going to get new extreme. So I'm just sitting patiently. And look what I have. I have a new extreme, first entry long, pullback, second entry long, failure. Now I've switched it up a little bit. This is now a second entry long. Why do I count for second entry long? Because in downtrend, while we're heading all the way down here, the high probability setup is going to be two-legged pullback at the key entry point, or failed second entry long. There's going to be a bottom pick pattern. So this would be, under normal circumstances, high probability setup. EMA holds price, key entry point. Look how nice this bar is, but take a look. You're going short directly into this triple bottom, double bottom. You don't have enough room to these lows. If this bar closed a little bit higher, this would have been good, but you don't have enough room to these lows, and this is what would have happened. Now you have a now triple bottom, so you can treat it as an attempt for a new extreme, and you can be convinced that you may not get a new extreme. This is two attempts to create a new extreme and it failed. So strong bullish momentum above exponential moving average. You're expecting correction or straight up reversal. Look what you have here: one top, double top, triple top. And I have a new low, first entry short, second entry short. Can I sell right now? I can't. I have the short-term uptrend in play. I'm at the top of a trading range, yes, but I just came from the bottom, and 2 attempts can be considered as a new low. So after that, you expect correction or straight up reversal. So let the correction play out. There is the break, there is the new extreme form, and there is a first entry short, second entry short failure. This would be a reversal pattern, but I cannot go long into triple top. This is a tight range. I cannot go long here. If there was no double top right here, we can expect reversal, but since there is a resistance right here, I cannot go long here, even though this is a reversal pattern. And look what you have. Break, new extreme indicated that the uptrend played out, and I switched to trading range rules. Now I simply play the trading range rules, which is buy low, sell high. Now I have a new high, first entry long, and a lower high setup. A lower high is a confirmation of this little failed breakout, and this is a decent entry. Only thing I didn't like about this entry, and it requires a little bit nuance, because the lower high closed very low, sort of like there is no room to the prior swing, and if I draw the tiny trend line, I'm going short directly into this trend line. Now this is only a nuance that only a gut feeling will give you this information. You can't really put a finger on this. And if you took this trade, you followed the rule, I'm convinced this was a decent entry. I just didn't like how close to the lows we form. It sounds weird, but it's a little bit nuanced like that. Unfortunately, you always want to have a little bit of room to the previous swing. I even tried to dig deep for an example, but I didn't manage to find it in time. So I'm going to make a video about this in the future. But market is pushing higher, and look what you have here. You have a new high, first entry long, pullback, second entry long, failure. It stopped you out just by one tick, and then it instantly reversed and gave you a high probability setup. Why? Because it is a second entry long after uptrend played out, and you're going long directly into the resistance. So this is a high probability setup, and you never know when you're going to get stopped out just one tick before market pushes over. And take a look at the gigantic move up. So you switch from the downtrend rules to trading range rules. So you're selling the top. You have a break of this downtrend, a new extreme form. So new extreme was formed eventually, and you have a little failed breakout below this trading range, and most breakouts of trading ranges will fail. So you can expect pushback into a trading range if you follow the range rules, because most breakouts of trading ranges will fail. However, we came from the failed breakout up here, and this can generate strong momentum, and the target still is here. So I wouldn't be inclined too much to going long here just yet, because you never know, you can make a second leg down all the way down to the support, but it didn't happen. Market reversed strongly back above the exponential moving average. In fact, look how strongly is market pushing higher. We completely ignored the resistance, and look how far away you're getting from this resistance. So I'm drawing these shortened trend lines. I'm drawing them very tight. Okay, this is the first trend line that you would have. Look how you're going short directly into this trend line. This is the clue that this is what I mean by it closed at the very low like this. I'm drawing the shortened trend line. I have a break, but look at this massive leg up, and look at the second massive leg up. This is not proportionate to this move right here. These shortened trend lines are proportionate. 2 legs up, 2 legs down, but this is not proportional. So that this tells me that I already have to draw my trend line a little bit wider. Okay, this was the indication that I have to draw my trend line wider. Had we turned down here, I can stick with the short term one, but since we're pushing higher, I have to draw it wider. Now we have another failed breakout situation, and look how price action works like clockwork. Most breakouts of ranges will fail. Breakout to the bottom, instant fail. Breakout to the top of trading range, instant fail. However, this is now an uptrend, and I don't want to sell just yet. Something changed here. This was a strong bullish structure. I'm pushing lower. First entry long, but take a look at this uptrend. This uptrend just had a first break, and it needs to be retested. So this is the first entry long. You're still above the EMA, so you cannot go short anyway. And you have a second entry long. Triggered lower, EMA held, support held, breakout, pullback pattern, break a new low of the downtrend. So that tells you that the downtrend played out. You want to go long here. High probability setup, 2-legged pullback. This was the second entry short with the downtrend. This is the second entry long in uptrend. Okay, I'm going to quickly mark it as a high probability setup. As the market is pushing higher, you're expecting for price to still create a new extreme of this uptrend. So you may look for new low, first entry short, pullback, second entry short, failure. But it happens so far from EMA. You're already at the very top of this move. You have a new extreme. So for that reason, I don't consider it as a high probability setup, because you want the failure to be a little bit closer to EMA, and you want to have room to these highs right here. So you created a new extreme, but there's a spike and a channel forming, which didn't ended up coming into play. But this is what I was looking at. This is a very common pattern, And for that reason, I didn't like fading this breakout. Another failed breakout above the major trading range. So breakouts fail of micro trading ranges, but all from bigger trading ranges as well. However, when you're fading the breakout, you have to be careful. You can be a little bit greedier than normal. You want to wait for price to push far away from EMA. You want to wait for those two pushes up. And this was just a first attempt to fade the breakout. And you're not that far away from EMA. There is not that much of room. And a lot of times you will get first trap and then the second attempt to fade the breakout will work. So even though you see the market pushing lower like this, that this first failed breakout failed, don't get mistaken. Next time you will get trapped and you'll be wondering why it's failing. Be patient with those failed breakouts. Wait for multiple legs to a new extreme, just like here, multiple legs to a new extreme. The second attempt, this was the first failed breakout, it failed, and this was the second failed breakout. You got much further from EMA, much better entry. All right, so the market is pushing lower, and now you have a strong push below exponential moving average. If we're going to continue high from here, EMA is supposed to hold, but it's not holding. In fact, we created first entry long, strong bearish momentum below exponential moving average. So what I'm expecting right now, I'm switching the gears. Just like here, I expected for price to go all the way up to here, all the way down here. I'm doing the same thing. I expect for price to go from one side of trading range to go all the way down to here. I'm playing the trading range rules, selling high, buying the bottom. Now, this trading range started to get a little bit big, so there are trends within in the trading range. So we're going to talk about it. So now we have a new high, first entry long, pullback, second entry long, failure. But look, you're going short directly, very close to this trend line, but you're going short far away from EMA. Take a look how far away this bar is from exponential moving average. No, the second entry long failure has to close near exponential moving average. Now there was a little bit fake out because they trapped everybody out and then it instantly reversed down. And this is an indication that the bearish momentum is so strong. And something similar happened right here. You had a higher low here, first entry, they ticked higher, trapped everybody out, and it instantly reversed back up. So this was the additional momentum, and this is the same pattern to the downside. They trapped everybody going short here, just a tad early, reversed it, and instantly reversed down. But still, you're far away from EMA. I don't like it, even though it worked. All right, and take a look what you have. Strong downtrend, and you're never looking back. So you're just playing the same rules you're playing right here. You're looking for a second entry short at the key entry point. You have a new low, first entry short, pull back, second entry short at the key entry point. But take a look what happened. Price gigantic and closed directly at its low. All right, this would have been a great high probability setup just like here had it been a little bit smaller, but this is too big, close at the very low. I don't think you can go short here at this point on. You have to be a little bit careful because such a big bar shorting at its very low, you can get easily trapped. All right, so the market is pushing lower, and now you have a strong reversal up. So once again, you're drawing the trend lines. You guys can see micro break, micro new extreme. This is a very tight trend line, and very confusing. When the trend line is tight like this, it doesn't look like there's a micro break and a new high, but there is a very tiny, if you draw it really tight, there's a tiny break here and the new extreme was formed right here. But in case this is such a strong uptrend, I'm still expecting to like a pullback to EMA. If EMA is going to hold and offer me second entry long, that's going to be good because this is a strong spike. So it never happened. Okay, price created the first entry long, push below EMA. So I'm scratching the second entry long idea. I'm below EMA. I cannot go short at this point on. I have a second entry long failure. The pattern was right here, failed second entry long, and this is the same failed second entry long. And by the way, hope you guys understand the pattern. How you are using the rules? You're just focusing on the two-legged pullbacks. The second entry two-legged pullback is what you do. If it's a downtrend, second entry short is good, and failed second entry long is good. The second entry long is a bad entry. You want to fade the second entry long. You're going to rely on trap. If it's an uptrend, second entry long is good, and second entry short, you want to treat it as failure. All right, you just switch it depending whether it's an uptrend or downtrend. So you have a first entry long, second entry long failure. But above EMA, however, you want to see it push below EMA. This would have been great had it closed below EMA. At this point on, it's a little bit unsure, but you keep pushing below EMA. And take a look what you have, because you don't have this trend line yet. You don't. Or you have the short-term trend lines. You're drawing them tight. But once you have first leg to a new extreme, a second leg, you're starting to push lower and lower. And once you keep making multiple legs to a new extreme, another leg down, this tells you that there's a larger pattern. Every single time you have multiple legs to new low, new low, new low, you have to find the wider pattern. So there it is. Once again, reset the count here. First entry long, second entry long, horrible signal bar, far away from EMA again. You're looking for a second entry short. All right, so let me see. Okay, first entry short. Can I get a second entry short? Oh, look at this. First entry short, nice bearish bar, key entry point is holding. Maybe we get a trigger lower. I was preparing limit order, no trigger lower here. Market just pushed higher and gave you a no trigger lower. All right, and that can happen. You cannot pull the trigger too early. There is no entry that formed yet. But you guys can see we're coming from the top, heading from the bottom, healthy trading range. I'm also can draw a trend line like this. I'm just going to use it as a bias because this is now a bearish downtrend. Down, up, down. We're making lower highs and lower lows constantly. Okay, so once again, I'm keep drawing the short-term trend lines, expecting for corrections play out. But look what you have. Uptrend working higher, I have an overshoot. Or what overshoot does, it leads to break of a trend line or straight up reversal. So no surprise the price sliced through EMA right here because overshoot created a strong bearish momentum. This is overbought unnatural activity in the market and I cannot hold on to idea I'm going to get new extreme. Okay, we pushed so far down. There is no new extreme for this correction. This correction is very short term and short term corrections only require short term attempts. Meaning if just like here, you have a short-term uptrend and you don't get a second entry long at the EMA, I'm abandoning long idea. I don't even get a second entry long here at all, okay? That we just strongly push lower. The market is pushing lower, confirming the overall bearish downtrend. Look what I have. I have a new low, first entry short, second entry short, but right now I just have had a break and a new extreme form. This is overall stacked. I have the short-term uptrend in play. Just not a great idea going short here. I'm going to mark it as a, I forgot to mark this second entry short. But there's this short-term uptrend. You stacked, look how stacked up you're here. Such a strong depletion move down. You don't really want to just sell at these lows just yet because you want to respect the short-term uptrend, just like you respected the short-term uptrend here. Look how nicely price is hugging, and look how nicely price is hugging here. And here you had room all the way down here. Here you don't have that much room. And look what you have. Repeat pattern of this. Same uptrend and same overshoot, which will tell me that we're probably going to break lower. You have a new high, first entry long. Okay, so we may actually get a new extreme. Okay, no, we don't get a new extreme at all. Big bearish bar pushed below EMA. And at this point on, I'm basically keeping in mind this repeat pattern because the overshoot will generate a strong push in the opposite direction. And I have a first entry long. Already that we push below EMA is already a good indication that we may not even get a new extreme of this uptrend. Because if I'm going to get a new extreme of this uptrend, EMA needs to hold price. Okay, but it pushed below EMA. This is second attempt to create new extreme. And this is the last attempt because it's below EMA. This is the last chance and it failed hard. Okay, and this is now a first entry long, second entry long failure. This is a nice high probability setup. You don't have that much room. I mean, there's a room for quick, easy scalp down to these lows. Like this can be a little bit concerning, but this is finally the first failed second entry long. That was textbook right below EMA. All these failed second entry longs are either far from EMA or above. Far from EMA, above, and this one is finally right below the EMA. Nice juicy bar. Trend line is confirming price, and this was the trade that I took. And market is pushing lower. Also, all these patterns act the same. You just keep having these corrections and strong push below EMA, the correction, strong push below EMA, the correction, strong push below EMA. These are all kind of like a repeat patterns. But the reason why I'm not looking for a new extreme of this uptrend right here is because it is a very short-term uptrend, and I only want to give it a short-term attempt. Meaning I'm not going to leech on to idea of still trying to pick a bottom looking for a new extreme. No, EMA is supposed to hold if we're going to get new extreme. If we push below EMA, there is no new extreme to be formed. And market keeps pushing lower key. And this is now looking like a really strong downtrend. So I'm only thinking short. I'm looking for second entry short. So I have a new low, first entry short, second entry short, extremely far away from EMA. But this can look like a double trap. Honestly, even if I have this trend line up here, if double trap trigger right here, I would have taken the entry. Or I would have liked it because I was holding a runner, not taking, but I would have liked it. But double trap never occurred. Now this uptrend is proven, is working higher. You have a little break. You have a move to a new extreme. However, all of this EMA is getting completely flat. Bunch of bars are stacked. This is a congestion consolidation area. Bars are big. This is not clean entry. Skip this trade. And then you have a new high, first entry long, pullback, second entry long, but you're shorting at the very low of this entire move. I mean, this is a decent entry. I'm just going to mark it just for example purposes, educational. Had it close a little bit higher with more room to these lows, because this is really now looking like a strong downtrend. Every single pullback below EMA, price keeps pushing below EMA. So this is not a horrible entry, but you just are risking a lot going short directly, almost at the very low of the move. But market keeps pushing lower, and you find yourself at the bottom of the trading, the bottom of the trend channel line, and this acts as a trading range. You're coming from this side to the other side, and vice versa. But you don't want to go long. This is a bearish structure. This is a bearish bias. You only look for high probability setups at key entry points. So I'm not interested in going long here. And look what market happened. Strong push higher. I have a new low that was formed. This is lower than entirety of these lows, and I have a first entry short, strong push above EMA, which is indicating strong bullish momentum, and I have a failed second entry short. You're below the key level for the day, and this may be the breakout, because this was the first breakout and it failed. So just like we talked about the failed breakouts, this was the failed breakout to the downside and it pulled back. And this may be overall pattern, maybe a bigger trading range. So you may expect for price push all the way up to here. But since this is still bearish downtrend without intact this trend line, I think this is not the greatest entry, because you're still far away from EMA, but it generated, look how powerful these two-legged pullbacks and traps are. It generated such a strong momentum. I'm not going to mark it though as a high probability setup. You need to be quite experienced to pull the trigger here, so far away from EMA. At this point on, you only get a first entry long. There's no entry, no trigger above, and you have a dilemma here. Are we gonna get new extreme, or are we gonna get new extreme of the upper trend line, of the uptrend or the downtrend? So you're just waiting patiently how EMA acts, and you just now are getting the clear clue that this is a strong uptrend. There is no denying that the bigger pattern trading range right now played out. All right, you have to abandon the idea. You move way too far. You cannot expect for price after 46 points to go back all the way down to create new extreme. Okay, the bigger pattern is trading range for the day, and it won out. Okay, so I'm completely forgetting the bearish bias idea, and I'm just switching to longs. It's that simple. EMA is pointing up like crazy, and this is all I'm focusing on. I just want to see two-legged pullback at the EMA. So come on, can we get second entry? A bunch of first entries are working, are not interesting. Okay, we get a first entry long. Can we get a second entry long? And there is no support. EMA didn't even, hold price next on the second entry. Slide through the trend line as well. Then you have a first entry long, second entry long, but it's below exponential moving average. Okay, you have a new high, first entry long, second entry long, failure. Can I take this short? I don't think so, because this is just a first break of this uptrend, and I expect new extreme. This trend line is big. This is the bigger pattern. I want this trend line to respect the overall pattern right now. Plus, we're coming from the low of the trading range. All right. So the market is pushing higher, only a first entry short, and this entire area is starting to get very congestive. Take a look how EMA is flattening. Bars are really stacked. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 bars, 13, 14. Like this entire area is very confusing, very, very congested. You probably want to go long, because if you take a look at this geometrical pattern formation at the bottom, this is the trend line that I was paying attention to. First, my trend line looked like this. To be honest, my trend line first looked like this. This was my first trend line. Then I slightly widened the trend line like this. This is my second trend line. But once it broke down here, I kind of deleted it. But that was exactly the point where eventually price improved the trend line. So I had to put it back up here. All right, and why am I looking for trend line? Why am I not looking for price to go all the way down? Well, because this was such a strong move up, 50 points up. This is now the legit uptrend now, and we're coming from the low of the day. We're not just going to go all the way down here to retest this downtrend. So I'm just going to quickly delete it just to make it less cluttered. I don't see any decent entry. You kind of want to go long here, but bars are so stacked. There is no first entry short, second entry short failure. That would have been great, but you just have to watch market go without you. Strong bullish momentum, extremely strong uptrend. You get a new high, first entry long, pullback, second entry long. EMA holds price, break new low, attempt new low for the downtrend, which tells you that sellers are no longer in control. A small little inside bar. I really like this entry. I'm going to mark it instantly because such a small bar, EMA holds price. You may be concerned a little bit about the key level, the resistance for the day, but this is such a strong uptrend. The EMA is proving you and giving you signs that look how bears are struggling to push below. I really like this second entry along with the direction of a trend. You just get quick enough scalp, market push lower, and look where the confirmation is. This is the first leg, pull back. This is the second leg, and it's where exactly at the key entry point. All right, but it's a little bit risky because we just sliced through the EMA and we're coming from the resistance. So decent entry, a little bit aggressive, but it would have worked easily for a quick, easy scalp. It would have been better high low above EMA, but you never get higher low. Market push lower. So I'm not going to mark this entry even though it worked, because you just came hard from this resistance and you kind of need a little bit more proof here, I would say. But the market is pushing higher. You have a new low, first entry short, first break of this overall uptrend. So what do? I expect the new extreme form. Can the market give me the possibility of jump on board and give me a opportunity to buy on a new extreme entry? Because I want to see a new extreme. And there's a new first entry short, second entry short, above exponential moving average inside of this trend line. Look at this big bullish bar. Structure is still bullish. I'm going long here. High probability setup. Once again, hopefully you guys understand that you're not even interested. You don't even think about these bunch of first entries, buying at the top, selling at the top. Just wait for these two-legged pullbacks. That's where all the magic happens. Two-legged pullbacks with the direction of a trend at the key entry point is all you need. If you just sit on your hands and wait for these setups, that's all you need. All right, so you have a break, new extreme formed, you have a high low, but you don't want to go long after break at a new extreme. So you're just waiting patiently, you're waiting patiently. Can I sell this? Is this enough indication of a bearish momentum? It is good indication of a bearish momentum, but I cannot sell. Why? Simple answer. 64 points will not gonna just plummet lower on a dime just like that. These big uptrends, you always want to be careful and you always want to still expect that the trend may flatten. This is just too early to sell just yet. Even though you have a break and a new extreme, there's a point in price action when trends are so large, you came completely from the bottom to complete top. This trend is so strong that you're just not most likely going to push lower. So don't take any failed second entry long. Don't take any lower high. Instead, wait and be safe if you can get another push above EMA. And look what you have. You have first entry short, failed, and you're pushing already above the exponential moving average. So this is good. At the time, I've also been watching a little trend line like this because we're flattening out. And this trend line is fitting even on the top. So this is a possibility as well. But look how strongly you push above EMA. And you get a first entry short, second entry short, big bullish bar. Trend line is holding. Key entry point EMA is holding. This is a nice bar. Same pattern as here. Failed second entry short. Same pattern down here. And this is a high probability setup with such a nice bar. I still am leaning bullish. Look how price just is, you know, overall bullish bias is strong here. And look at the strong bullish momentum. They got everybody stops going short too early. And market created a last depletion move. This is typical. When you see such a strong bullish move at the very finishing moment of the trend, this can be considered as a depletion entry. So market is pushing lower. This is such a strong option that I would be expecting a second entry long. I'm willing to go long on a second entry long. Can I get a second entry long just right here? I don't. Okay, so I have to switch to the markets. If there is no second entry long above EMA, I cannot buy. So I'm just sitting patiently. Market is pushing low. Okay, market is pushing lower. Okay, so we're actually pushing way too down. So we have a final break, multiple legs to a new extreme. The overall trading range is playing out. It's the bigger pattern, and now I'm safe to be looking for shorts. I don't want to sell just yet here. I want to see a proven downtrend. Once I have proven downtrend like this is where I know that it's okay for me to switch the gears, and I'm going to go short here. All right, so I'm just once again doing the same thing, looking for second entry short at the key entry point. First entry short, pull back, second entry short. Here's the kicker. You don't have this trend line yet. So you're watching it like this and you're far away from EMA. can't take this. Decent entry, two-legged pullback, second entry short, but you don't have, how can you find this trend line yet? You're probably looking for trend lines from these highs. You don't have this trend line, you only find it now. So decent entry, but a little bit hard to find in real time. And you have a new low, first entry short, a second entry short. But you have a little bit of an overshoot of this bigger pattern. And you also have this short-term uptrend in play. All right, so once again, decent entry. This one is borderline being marked. I really could mark it. I'm just going to mark it because it's not such a bad entry. Because this is now really starting to be strong downtrend. You're at the EMA, but you have the short-term uptrend. You have a break. It is so strong that you didn't even get attempt. But a lot of times you want to wait for a lower high. So this is just really advanced entry. And not something that is really high probability. Unfortunately, you have to watch this go without you. You don't get a bunch of good second entries at key entry points. But you guys can see how powerful setup it is. Even though you're not at the key entry point, the second entries just keep working. This is how market likes to move. First entry short again, second entry short. You have a break at a new extreme, which tells you that the uptrend played out. But it is a push above EMA and the bar is bullish. Cannot sell below this bar. It worked. Forget about this. I can't sell below this bar right here. And we're pushing back above EMA, giving me signs of a bullish momentum. And look what we are doing. Look how EMA was pointing down, and now it's flattening. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, something like that. Bars are just stacked. We made 15 bars, and we didn't really push that much higher and that much lower. We're still net of it is 0 point movement. So I'm just sitting here patiently. For that reason, I don't even like the lower high. Look how EMA is flat. Look how it's in the middle of those bars. This is a small little congestion. Just wait for price to do its thing. All right, so I'm just sitting patiently here, watching. I have a confirmation of this trend line. I have a first entry long, strong push bull EMA indicating bearish momentum. This is good. Look how the overall bearish this structure is. I'm not even thinking about buying. And I have a second entry long failure. This is a high probability setup. This trend line was just confirmed. Push bull EMA indicating bearish momentum. Price pullback, nicely touched the exponential moving average, the key entry point, and now strong bearish move down. I have only first entry short. It's hidden second entry, but it's just a first entry. Can't sell this. I have first entry short, second entry short, but the uptrend is in play. This is just the first break, so you expect a new extreme. You don't get a new extreme. You have a first entry long, pullback. It looks like there's going to be a second entry long, but already bars are starting to stack up. And look how big this bar is. You cannot go short below such a big bar because your stop loss has to go even above this bearish bar right here. So for that reason, you have to skip the entry. A lot of bars today got really big, so you probably have to skip a lot of entries. And by the way, this is why I forgot to say, because a lot of these bars are really big. So you need to scale down or use limit orders or increase the target profits. But some of these setups I marked, you may be wondering, it's too big. I probably would not have entered this. It's still a great entry price action wise. Okay, today was quite rare because it got really spooky and volatility was really insane. Today was really quick. Okay, but that doesn't mean that the setups are not okay price action wise. All right, but when it's really big like this, you really have to skip it. The market is pushing hard. Micro double top. So you have a first break of this bigger downtrend. So you're expecting a new extreme to be formed. You have a micro double top, decent entry to go short. And this is a second entry short. Look at this. New low, first entry short, second entry short, 2 legs up, decent entry. So this could be a second entry short with the direction of the overall downtrend. And now you have a new extreme form. So you're just now sitting patiently. You expect correction or straight up reversal. All right, I'm not interested in buying because we came from failed breakout. This was a strong bearish structure. You know, we'll see what the market is, but the overall context is very bearish now still. First entry short, kind of like a weird second entry short, not interested, even though it's working. You keep making new lows, okay? So this is odd. You have a break, first leg, second leg, third leg, fourth leg, multiple legs to a new extreme. And so this is where you can find look how nicely you can find it off the lows. That's the little tip. A lot of times just find it off the lows, copy it, put it at the top, and you see that we're flattening out. And this is unusual, but this is now the pattern you have. So we're flattening out. You have a new low, first entry short, second entry short. Once again, 2-legged pullback at the key entry point, breaking a new extreme. So the uptrend played out. Market is pushing over, and you're starting to look how the EMA is once again getting really flat. You're starting to stack up. 1, 2, 3, 4, 5 bars stacked, lower high. Even though it worked for a scalp, this was like a 13 tick scalp. I don't like it. Why? Look at this. This is the low of the day key level that you would mark at the very beginning of the day. You guys can see how these key levels will come into play later on in the day. So this is why you have to be hesitant going short directly into this. Okay, price is starting to get a little bit flatter. It's not such a strong downtrend. It's starting to flatten out. It's starting to be more of a trading range. You get a failed second entry long, but price by then is completely congested. EMA is completely flat. So just sitting patiently. You have a break to the upside of this channel. So you expect most likely a new extreme to be formed, and you have a failed breakout, but you don't want to short just yet. But then price gave you a nice lower high confirmation of the failed breakout, and you're so far away from EMA, such a high likelihood you're going to push lower. Also, this is like first move up, pull back, a second move up. You have a double top with this top, first break of this flatter channel, so you still expect new extreme to be formed. And the market never even gave you a failed second entry long below exponential moving average. You just have to, you can't take it all the way down here far away from EMA. You just can't do it. Okay, you're below the key level, and you just had to break a new low for this trend, for this bigger trend, even for this micro trend. So all three new lows are being formed, and you're below key level. So you have to stop shorting now. Every single downtrend has a new extreme, which tells you that the downtrend is over, and you're coming from failed breakout. So if anything, you can jump on board with longs, and you have a new low, first entry short, second entry short failure, reversal pattern. Look how market strongly pushed higher. I need to mark this beautiful second and failed second entry short, nice bullish bar, reversal pattern after new extremes are being formed. EMA holds price, and this is where it starts to get confusing, because you didn't really push higher, you didn't really reverse from here, you push back below EMA. I can even just widen the trend line a little bit like this. I have a break, new extreme for the uptrend, so this tells me that the short-term uptrend played out. I can't go long no longer when I have a new extreme of this uptrend. This is now a trading range, so if anything, I'm leaning to sell the top, but to be honest with you, EMA is flattening, we are flattening, consolidation. I don't see any entry I would like. Once again, we're just hovering around this key level. First entry short, second entry short, but it's below the bullish bar. I cannot go short here. Actually, if there was a nice big bearish bar second entry short, I would like the second entry short, because we just push below EMA, EMA would be holding. But second entry short, the bearish bar never really established. It instantly reversed back up, and I cannot sell below bullish bar. So market is just pushing higher, and it's chopping around here, kind of do its thing. It's very hard to pick any entries. This would be all hindsight, because once you have no clear direction like this, once you just have wedge like this, you're pretty much gambling. It's tempting to take both sides. I mean, it's tempting to take both sides. You're just sitting patiently. At this point on, it's really hard still. You're still pushing lower. So the bias is still bearish, and you actually have a new high, first entry long, pullback, second entry long. But take a look how price is still stacked here. I mean, this is really, you can't really take entry in this. After you finally push lower like this, now look at this. Finally, clear bias. Okay, I'm going to draw my trend lines. Finally, a clear, nice bias. Maybe I can get second entry short at key entry point. Can I? No, only first entries are working. I'm going to draw my trend line. Break, new extreme, but this is a bearish downtrend. So uptrend played out. I have a new high. Back push below EMA indicating strong bearish momentum. I need a new extreme. First entry long, pull back. Second entry long, failure. High probability setup. Nice, gorgeous bearish bar that closed below EMA. In downtrend now, and price created a new extreme. And look what now we're doing. Actually, now we're getting very late, and this video is getting out of control, because there's still, oh, we actually don't have that much price action. But this was the market for the day. You guys can see how insane it was. So much price action. Bars are big. You don't want to, last thing you want to do is overtrade on the day like this, because one trade can wipe out your profits just like that, because the stop loss is 6 points, 7 points, 5 points. So once you get 2-3 trades, if you manage to get 2-3 winning trades on a day like this, trust me, don't be greedy, be completely fine with this, because last thing you want is to be 2-0, 3-0, make one mistake, give it all back on a Friday at the close, and you will have horrible weekend. Trust me, you never want to mess up your weekend like this. You want to relax and think positively about trading. So never try to be too greedy. Take your 2-3 winning trades. I took even one trade because I caught a gigantic runner all the way down here. I trailed it literally at the very bottom, so this was 20.5 points, I believe. So I only took this one single trade, and I cannot risk giving it all back because this was worth like three trades. So patience is important, and yeah, a decent setups, but the signal bars were just hard to enter. So take care, buddy.